taxes will be on the topic today. So without further ado, I'm going to turn the podium here over to Gary Hamilton to take any of your questions. So, Gary. Thank you. Thank you. It's all yours.
Good afternoon. Pleased to be here, and thank you for the invitation. Just a few little paperwork items from the treasurer of the Pachyderm's perspective. Dues for next year can be paid anytime. It's supposed to be paid by the end of March. We've already had people paying in the last quarter of last year, and that gives them membership into 22. As far as I know, there won't be any price increases on any of the festivities that we have here, and that's the only real thing I needed to mention about that. Anytime, of course, you have any questions, feel free to ask. There are on the table business cards for myself and also for two ladies that I share offices with that do bookkeeping. They had other excuses to not listen to the tax stuff today, so they're not here. I do have a new staff member, Eric Russell. If you'd stand up, Eric, don't be bashful. He started this week, and he's going to help me get taxes done, which continues to grow, and figure out all the technology that I'm not using that I could, like display screens and so on. And wife Debbie's here. She's been here many times. Most of you know who she is. And my daughter Olivia, who helps me occasionally. She's a sophomore at Andover E Academy. She's here. I have an associate that's an enrolled agent, Marilyn Rollins. She handles the Butler County segment of the business. Works out of her home and it's part-time. And Vern Huckins is in our office. He's a general business consultant. So that's the Hamilton and Associated Organizations group. I appreciate all of them, and they're all very helpful. Okay. I do have one political bit of information. After Kristen Siema's converted from a Democrat to an independent and said she was going to caucus and vote as she had, which basically means with the Democrats. News was that Schumer made a quick run over to Romney's office just to make sure he would continue to vote basically with the Democrats. So they still have their majority. Taxes are ever-changing. Part of my presentation, and this will be toward the end, is an article that I just get in the mail. I get updates and information weekly. A lot of it's internet, but a lot of it's other publications. First area that I'll touch on, and there are some note papers on your desks. If you have a question, you might want to write it down, because tax questions sometimes can be pretty involved. And after the meeting, if you have a specific thing that you might want to ask that you don't necessarily want to ask in the group, that's fine. I'll hang around and try to answer those. Okay, Kansas taxes. I've been two-day seminars in the last 2 weeks, getting updates and learning. As I say, it's a continual process. As you may know, hopefully, last year, 21, the state law changed and we could itemize for Kansas, even if we didn't for the federal. Because when Trump raised the federal exemption to $24,000, the majority of my clients didn't have enough to itemize. I mean, if you had made a lot of medical expense, maybe, or if you had a big house with a lot of taxes and insurance or interest, maybe. Taxes were limited to 10,000. They call that SALT, which is state and local income tax, sales tax, personal property tax, etc. Kansas did not include that $10,000 limit in their itemized deductions. So that is a plus for Kansas. Medical is still subject to the 7.5% floor, so you have to have an excess of that. But the Kansas standard deduction's only $8,000. The federal's over $26,000 for next year. Single, $3,500. Head of household, $6,000. And if you're married filing separately, which is typically not a very good tax plan, is only $4,000. Kansas passed the sales tax exemption on food. The two presentations that I've had, the criteria and the definition of food, in my opinion, is the most convoluted thing you ever saw. They did a chart, and the first question is the item an alcoholic beverage or tobacco product? If yes, it's not food. If no, then you go to the next question. Will the items be ingested or chewed for taste or nutritional value? If no, it's still the 6.5% state tax rate. Local sales tax rates were not affected by this. So when they get down to zero in a couple of years, or sooner if Kelly completes a campaign issue and something she brought up, then you'll still have to pay on the liquor and packaged goods. But it goes on, soda drinks you buy at the grocery store are food. Soda you buy at McDonald's, because it's in a cup and they serve you, is not food. Restaurants are not. And then they go into other little screwy areas that I don't even have time to go into. But it is to me, they should have just said, okay, food sales tax generates 20% of the sales tax revenue to the state. So why didn't they just lower the 6% sales tax rate to 5%? Give everybody a break on everything. But politics, as we all know, they never do anything simple. Another state thing that they have passed is to try to offset the SALT limits on the federal return, where you can only deduct $10,000 of income tax at the local level, federal's not excluded, state, city, which fortunately we don't have, by allowing pass-through entities, which are sub-S corporation, partnerships, so on, to pay the pay the state income tax like a C corporation would, at the maximum state rate, which is 5.7, and then pass that through to the stockholders. It's a deduction on the corporate sub-S partnership, pass through to the individuals. If your tax rate's less than 5.7, you get that money back. This is the first year for that. I don't know just how that worked as to being productive as far as allowing that deduction. But most states did that. Of course, the states that don't have any state income tax didn't mess with that. But again, every time they come out with a tax simplification measure, you can lay odds it ain't simpler. It's going to be more messed up, more complicated. Kansas tax rates really haven't changed. Hopefully this year they're going to have a projected, according to the Secretary of Revenue, $4 billion with a B dollars on hand at the end of the next fiscal year. Well, the state budget's about $10 billion. So my question, of course, is if they got 40% excess, where's ours? But so far it hasn't materialized. The one thing they did do that will help teachers is that the federal has had a $250 teacher supply to buy to help in the classroom and so on, deduction on the federal return. That's up to $300 for 22 because of inflation, but the state passed a $250 direct tax credit on Kansas return for a teacher who spends at least that much on school supplies. My oldest daughter and her husband are both in the school system. He spends way over that. He's an assistant football coach, and he deals with special needs kids. Amy has some, that's my oldest daughter. So that's $500 direct. And I personally think the legislature did that because they're tired of giving the school districts money and the teachers don't get much of it. So this is a direct benefit to a teacher, and it's a $500 reduction in effect in their state income tax. So sometimes things happen that are quite beneficial. They're expanding the homestead credit. If you own your home, pay taxes, and you're poor enough, which this next year the limit's $50,000 in income, including Social Security and so on. They've expanded that, and they'll continue to adjust that for inflation. There have been bills introduced that didn't get anywhere that were to increase that substantially, especially for seniors to get some relief. I haven't talked to any clients this year or last year that didn't have their house worth more and they pay more tax. The state also passed a lot of miscellaneous exemptions for some charities and other groups, exempting them from sales tax. Of course, aircraft and farming and stuff are exempt from the state sales tax. But really, tax-wise, that's about all that happened in Topeka. Most of the political ads, touted they were just doing miraculous things, which was, political ads. On the federal side, you remember when they passed the first Trump tax cut, he was going to have us all be able to file on a postcard. IRS came out with a form that was 2 half pages, theoretically, a big postcard, but information on both sides. The 22 draft of the 1040 is a full 2 pages, and all the schedules that got added on to the Trump tax postcard are still there. I think they may have dropped one. So, as I said, things never get simpler. Okay. For 22, inflation's been significant, so phase-outs and tax brackets have changed significantly. They've come out with some new rules on IRAs because during COVID, they suspended the RMD, required minimum distribution for IRA for the 1 year while they were handing out all the money that they did, tax credits and payments and so on. So that has changed. It's fairly complicated. I won't try to go into it. But if you are in a situation that you didn't take an RMD in 21, you can catch up in 22, but we've only got 2 weeks left, so you may want to check with your tax advisor. Taxable income, if you're married filing jointly, the first $20,550 is taxed at 10%. Then the next bracket goes up to $83,550, and that's at 12%. If you have long-term capital gains and you fall in that 12% bracket on the federal, your long-term capital gain tax is 0. Unfortunately, if you're over that threshold, it's probably 15%. Kansas doesn't give any break for capital gains. It's taxed at whatever rate you're at. Most people are in the top 5.7% on the incomes above 60,000. I mean, a couple, it's just not feasible in most cases that you can live on less than 60. Now, that's after your standard deduction, but it's still high. When I first started doing taxes in college, it was the form, the 1040 was printed on just plain white paper, and you used a transparency, which I assume you all know what that is, to make it look like the form 1040. And then all the supporting schedules were just printed on plain white paper. Well, in this day and age, I don't think you could do a tax return without a computer. I mean, it's just complicated. So anyway, be that what it may, the brackets have changed and grown substantially. This year, they jumped for the base $1,400. So inflation's kicked in. I hope you're all planning on your Social Security increase that might help pay for your groceries. Not pay for all of them, but may pay for some. They've changed the rules on minimum distributions. We all are more healthy and living longer, so they've revised those. So you may want to check for 2022, the current year. If you haven't taken all of your RMD, they may be able to recalculate and do less. If you're already over that, just to your normal distributions you take out to buy groceries, then that's not a factor. But they keep changing that. IRS comes out with changes, Congress does changes, and they tax rules into almost anything you can imagine that they produce on Capitol Hill. The media used to be better at reporting these little hidden increases, but that's not on their agenda at this point. Social Security, as you know, has gone up. The rate has not changed, but the earnings, the maximum jumped from $147,000 to $160,200. And that's not tied to the same index that they use when they give us our increase in benefits. It's a prevailing wage calculation. I'm not sure how they calculate it. I'm not sure anybody is outside of the bureaucracy, but it seems to go up much faster than the benefits to the recipients. Filing requirements are basically the same that they've been for years. Head of household and so on. Dependent care, a lot of the credits and the big credit, if you have little kids, from last year expired at the end of 21. So this year, basically it's a $2,000 child credit for the little ones, $500 for the older ones. Below age 17 is still considered in the younger bracket, but that Instead of being 3,400 last year, I believe, it's down to 2,000. So there's an article came out in the news like, big change, your tax refunds will be less. Well, if they take away credits, it's going to be less. Hopefully, people will be ready for that. 1099-K, which is the report if you're in business and you accept credit cards. The credit card companies have to report to you and to the IRS the volume of transactions, how many, the type of industry classification, and the total dollars that you accepted in credit cards. That limit used to be 100,000. They've lowered it to 600. So there's going to be a lot of paperwork, and a lot of practitioners, the clients didn't give them the form because it was something new. So they really didn't understand what importance it was. If you're a corporation, there's really no place to report it for 21. That may change once we get all the forms for 22. New tax software is available. I've got mine, but there's lots and lots of information that's not there and updates. Kansas's K-40 isn't approved yet, so it's not in the package. It hadn't really changed, but they continue to drag things out, and the bureaucrats don't do a very good job. So, okay, the child credit last year was $3,600, down to $2,000. Earned income credit has been expanded. The brackets get adjusted for inflation, so that's changed a little bit, which could affect kids and grandkids of most of us. If you're paying estimate tax, those are due January 17th due to holidays. If you haven't, then of course tax returns are due for the bulk of the taxpayers in the middle of April, which I'm sure is no new news to anybody. Standard mileage rate on if you use a car in business, but it's not a depreciable asset, meaning 50% or more use. They changed it mid-year because of the increase in gas price. Next year's, I don't think will change much from what it is for the last half. That currently is 58.5 cents a mile, so that could give you some benefit on using a car. For charity, it's set by statute at 14 cents, and they came up with that years ago, and they haven't adjusted it. Moving has changed, but nobody that moves can deduct anything now unless you're in the military. So again, typically what Congress does is they say they're cutting taxes with one hand, and with the other one they're eliminating deductions. We can't deduct a lot of things on Schedule A, itemized deductions that we used to. Moving expense, I mean, it's almost like they knew COVID was coming, because all of these people that worked from home, usually it used to be employee business expenses or deduction, including home office. That went away. COVID hit, everybody works from home. They can't deduct anything. Hopefully they saved enough on commuting to help offset that. IRS has suspended sending computer-generated notices in a lot of categories. They came out with the first list that was basically notices that they rarely send, which is kind of a joke. Now they've come out and suspended notices on taxes you might owe, payments maybe that you've made on estimates that you forgot about. We have numerous clients, you know, they'll forget about one of their estimates, or they'll think the January one was for the prior year, current, and the new January one's for next year, so they leave that out, file the returns. IRS changes it, but they do a much poorer job of sending out information as to why or what they changed. Getting a hold of IRS is almost impossible. You can call them, they say, call this number if you have a question or need something. You might be on hold an hour and a half, and then you might get somebody that might be able to answer your question. Practitioners, we call, and they do what they call a courtesy hang-up. After so long, the phone just hangs up. You know, what a way to run an organization. But I've always said Internal Revenue Service should drop the word service from their name. 50 years ago, that was pretty good. They have a taxpayer advocate that we can get a hold of, really anybody can. Wichita used to have a lot of agents because Wichita was a training facility, so we had more audits, but really we, as a profession, were training the IRS agents how to do their job, on-the-job training, which, you know, at least we could train them a little, excuse me, a little bit in the right direction. One of the seminars that I was at earlier, an ex-IRS agent was one of the speakers, and she'd been with IRS 20 years or 30, I don't remember. So she leaves IRS and she joins a CPA firm, and her presentation was not the best one of the 2 days, but it was okay. But one of the pitches was they have, you know, the 80,000 new employees that they're supposed to be hiring. According to her information, they have 50,000 current IRS agents that can retire over the next 3 years. The Republicans during the election, of course, said they're not going to fund the 80,000 from the House. We'll see. But if they've got 50,000 people that have been there a long time and pretty well know their job, they've got to replace them. You know, who they're going to replace, I don't know. She made the pitch. She said, if any of you practitioners are interested in going to work for the IRS, we've got lots of openings. When I first graduated from college, I had an offer from IRS, and at that time I decided I didn't want to work for the enemy. And then that's my approach. I work for the clients. I figure the least tax that they owe, and we prepare, if we're in the gray zone, which most of the tax law is gray, we prepare that we might get audited. Now, I haven't had an audit for many years, partly because I'm not sure the majority of the IRS agents would know how to conduct an audit. So who knows? But anyway, audits have not been significant. The ones that they really should audit are the biggest campaign contributors, and they're not going to get audited. You know, like the cryptocurrency guy, millions and millions of dollars, a lot of it illegal campaign contributions. But you know, there's all sorts of red flags popping up now. It's kind of like Twitter. Now that we know what went on, we're finding out all sorts of stuff. Well, the same thing was true there, but you know, you don't audit some of the biggest contributors to the campaigns to get our politicians reelected. Retirement accounts, if you're still working or still contributing to retirement, those limits have gone up. Simple IRA, which is what I use, is up. You can put $19,000 in annually. Well, that's a pretty good chunk of money. Right now, you probably don't want to actually invest it in the stock market. You may just want to leave it in cash, but the market will come back. I've got a poster that my Phoenix daughter is ultra conservative, and she sends me Trump stuff. And one of them is the wanted poster for Trump. And the bottom line is to take the economy back to where it was, to give us our freedoms back, and to continue to drain the swamp. One of the bumper stickers, drained Twitter in 3 weeks. We need him in Washington, which we do. The IRA limit went up to 6,500 plus 1,000 if you're over 50. As I mentioned, standard deduction. This my presentation's been evolving every day. I got an article today that I'll touch on at the end. So it's a constant changing. Spend a lot of time keeping up on it. We have to have 80 classroom hours or continuing ed from remote source every 2 years to keep a license to practice. And I just finished I've got an hour and a half to go for this year, which is a fiscal year through June. If you are able to itemize, I'm jumping around a little bit because, as I say, this has evolved over the last several weeks or decades, to be honest. You give stuff to Helping Hands, Goodwill, DAV. That's a deduction, again, if you itemize. And you're probably going to be able to itemize on the state because their thresholds are so low. It's coming up on year end. If you have capital gains, you're lucky. You may have losses you haven't recognized. If you're in the zero bracket, it doesn't make a big difference other than on Kansas, but you might want to sell some depreciated assets to offset your gains. Again, that's a very personal thing, but it's a tool that they use to lower taxes. 2 years ago, the Biden syndicate gets elected and talk about all these tax changes. Really, almost none of those have happened other than what they could do as far as IRS opinions or if they won a case in court. So there haven't been a ton of changes. Personally, I'm hopeful that the state this year will tackle this issue and give us some real tax breaks. But time will tell. Okay, my last segment, and then I'll see what questions you might have. This is the lame duck session. The Democrats are still in charge. Tax items that may come up. The bipartisan groups, and pardon me for reading this, the package of retirement reforms referred to as Secure 2.0. Well, the Secure Act didn't do a whole lot for us, but they are thinking of making some changes there. Depending on which internet blog or bit of information you read, the changes may be they want to take away or tax our retirement more. You never know. I mean, you can't really believe what you read there. These are accounting publications. They're wanting to do disaster relief for Florida and Puerto Rico and Alaska. Now, Florida, hurricane, Puerto Rico, I'm not sure what happened in Alaska, but anyway. The Republicans would like to enact the ability of businesses to write off research and development costs enacted as part of the tax cuts in 2017. A lot of those cuts expired at the end of last year, and all of them are due to supposedly revert back, including the estate exemption for 25. So we've got a couple of years maybe to get those accomplished. They're talking about trying to get this done before the 22 filing season. Well, the filing season starts officially January, but actually early February, by the time you get all the forms. Most of the software companies have basically got their software written and out. The publications and the books that we get that are reference material are established. So these last minute tax things are poorly planned. Usually they're very partisan and unfortunately don't do much for us. And sometimes they don't get explained. IRS, Congress will write a bill and they'll say, do this. Well, then they turn it over to IRS and IRS tries to figure out what does that mean, what's the impact, and they interpret it. Well, they may not get the interpretations out for months, so I hope they don't do too much other than maybe enact some things that are expiring by extension, extending them. Those things don't really change. They just weren't law, and now they're back in being law. The Democrats want to expand the child tax credits, a giveaway in a way. Child development and care, or child independent care. Last year I had a client, because of the child care, they paid out $16,000. $8,000 came back as a direct tax credit. Their refund was in the mid-teens times thousands because of all the gimmies that they included in the COVID things. Well, the Democrats would like to keep that in. Basically, the Democrats want us to all be dependent on that check we get from the government. And then they argue, well, look how many people get Social Security checks. Ain't the same thing. A tax credit or a tax refund of money you didn't pay in is just plain old welfare. We've all paid plenty into Social Security, so getting a Social Security check is not maybe what it should be, but it's certainly not welfare. They want to reinstate the charitable deduction for non-itemizers, which was the $300 2 years ago and was then $600 at the federal level. And mortgage insurance deduction, which has been a deduction if you have to pay mortgage insurance on your loan. That expired, they want to extend that. As this article says, tax legislation itself has become more partisan. Amen. Everything they do is to benefit a very small segment. They dress it up like it's doing everybody great service, favors, tax breaks. Once you sort through all the malarkey, it wasn't a tax break. Trump did it, and you see what the media did to him. If we're lucky, maybe he'll get to do it again in 2 years. So, anyway, it's a complicated area. On the table, as I said, I have business cards for myself and the girls that work out of the office with me. They have their own company, their own tax shelter. But we work very closely together. Also, there's mileage logs, and you're welcome to 1, 2, or however many you need. If you use your business vehicle, a vehicle in business, the mileage log is required by law, though in most cases, clients don't keep them. If we get an audit, we can go back and reconstruct what their mileage was, which is kind of like an excursion in fantasy land. But it's a written document, and the burden of proof, if there's an issue, is really on IRS. They're supposed to prove that you were wrong. And if you have a written document or your sworn testimony, that should prevail. Now, IRS doesn't use that approach very often anymore. They used to be service. As I said, they shouldn't be, but that's the way the law reads. I've got one client, just as a little side note, they messed up payroll tax deposits over the last 5 years. Agent kept asking for stuff and information and stuff, and they didn't contact me, which they should have. I wouldn't have charged them anything for a little advice, but IRS sent them a bill for $100,000. About 55 of it was real taxes. The rest was penalties and interest. So we've paid the taxes, and I've talked to the agent numerous times, though I've not met him because they don't have a receptionist at the local IRS office. They have 2 security guys out front who you can't give information to because they can't walk it through the door and give it to the IRS. So I've asked to have a face-to-face, but he's always has a reason why we can't. So anyway, we've mailed stuff back and forth. We paid the tax. He wanted bank statements for the last 6 years, all sorts of stuff. Well, once you pay the tax, that should be a major change in their attitude. So far it hasn't been. So we're talking 30-some thousand in penalties, which IRS is very good, or their computer is very good at sending out penalty letters. Excuse me. And I told him, I said, okay, we're going to ask for abatement on all the penalties, and I'll give you him reasons, and then we're going to recalculate the interest, because once they assess a penalty, the interest keeps adding on not only to the tax, but to the penalty. And in some cases, and I'm not sure they don't add interest on interest, but as you know, interest rates have gone up. So we're talking some significant dollars. And I told him, I said, you know, we need to reach an agreement on this. The interest would recalculate. I think I can get the client to pay it. The penalties need to go away. I haven't told him yet that I'll take it to appeals if I need to, because we're talking a lot of money. But he called me last evening about 6 o'clock. I said, you're working awfully late, because that is unusual. And he said, well, I work a 4-day week. So I said, oh, 10 hours a day? He said, well, I'm here 9 to 7. Well, that's 10 hours, but then you take out 2 breaks in the morning and lunch. That doesn't count 10 hours the way I count it. So anyway, we talked on the phone. He had a bunch of questions, and I was home, so I didn't have the file, so I told him I'd get back with him. And again, he wanted this information, because when it's trust fund monies, which payroll tax withholdings are, the corporation, of course, has employees. It's responsible to make the payment. But if it doesn't, they can assess it to the responsible party. And that's who does the payroll. May be an employee, it may not be. And that's what he's wanting to do, is assess, I think it's a 25% penalty to the housewife that did the books for not paying the tax, which, you know, but yet they came out because of pressure from Congress and decided to abate or refund penalties for 19 and 20 because of changing the filing dates, the fact people didn't file, COVID kept them at home, IRS wasn't there. My response has been, you know, if your service had been normal, none of this would have happened, because they would have notified the client, we got your money, we don't have a form to put with it. So anyway, we'll see how that comes out. Questions? Yes, sir.
Yeah, comment on what you said.
Go ahead.
At the IRS office, if you don't have an appointment, you will not get in the building. They don't have forms, they don't do anything beyond that door except you have an appointment to see a person, and then the guard will let you get to the door. like you said, you can't drop off anything. You have to make an appointment, you have to be met, and it's a real nuisance. What I was wondering, as another tax preparer, they keep talking politically about middle income tax relief. What does the government consider middle class now?
Oh, that's a good question.
What, okay, let me ask, what do they consider what?
Middle class.
Middle class.
Well, other than probably anybody that's not an illegal immigrant, anybody that's not on welfare. So the middle class is all of us. When they say they're only going to audit over $400,000 income, or a tax is only going to be on people that make over $400,000, you know, that ain't where the money is. We're where the bulk of the earnings in this country are, and that's what they're going to tax. I mean, it's like any campaign commercial, you have to take it with a grain of salt.
Mr. Hamilton,
Yes, sir.
you know, this charitable contribution, is there a limit on that for deduction?
Okay, charitable contribution.
Right.
What's the limit?
Are you asking who or?
Is there a limit? Is there a limit?
Okay, if I understood right, the limit is 60% of income. So if you win the lottery and you want to shelter a lot of your income, do a charitable remainder trust or something, dump 60% of the money in, which you'll be able to manage and do with pretty much as you want. If you're like the Clintons, you can do anything you want. And you'll shelter a big chunk of income and get a nice refund out of what they withhold from your lottery winnings. So charitable on the state is if you can itemize more than their standard deduction, which is very low, $8,000 for a couple. And so that can be a tremendous benefit. But stuff you give away, I've got worksheets that give an idea of what it's worth. You give stuff to an organization, they won't put a price on it typically because it's very subjective, but that all counts. And on Kansas, 5.7%, I mean, that's a decent return on your money. Yes, sir.
If you were king of the world and could change anything in the federal tax return to make it really more simple to deal with and still fund the government, what would you do?
Well, I've retired twice, and I'm sure my wife wouldn't mind if I did again. If they ever simplified it like Trump was pushing with the postcard, that'd be fine. You can file online through the IRS, you know, no fee, but a lot of the people, all of my customer base is referrals from other customers. I don't do any marketing. This is the first presentation I've done in a long time. It's people, maybe they filed H&R Block, maybe they filed it themselves, and they miss stuff. They have got so many credits and screwball things in the tax code. When I first started, the tax code was tissue paper thin sheets, 12 volumes, 4 or 5 inches thick, and you got updates every week. And one of the gals in the office would change the sheets out. Now they don't even publish it. It's all on the computer. And if they try to put it in volume, it would probably be 2 or 3 times that. I mean, simplification is not there, never will be. And I had one client ask me, he said, well, they're going to eliminate greenbacks. They wanted us all to use credit cards so they can track payments. I said, well, 2 reasons they'll never eliminate greenbacks. The illegal market, drugs primarily, and the kickbacks or gratuities that the politicians get. it's hard to pay a bribe with a credit card.
Yeah, I don't know if you remember, but when Bill Clinton donated his boxer shorts, you know, and got a deduction for boxer shorts. So if I donate my boxer shorts to the Goodwill, and I say they're worth, you know, $50, I mean, if that's what I think they're worth, you know, maybe you could go buy them, you know, for $15, but mine are worth $50. Can I do that?
You can do anything you want to until you get audited. And depending how significant the item is on your tax return, the agent may not even look at it. The computer tells them what things on this tax return are worth looking at to generate dollars. So, you know, if you gave 100 pair at $50 a pair, they'd probably get looked at. If you gave half a dozen, probably not. But like I say, the tax laws, they've always said this, and it's very true. You could take the same tax criteria information, give it to a dozen different tax preparers, and you get a dozen different answers. Now, I always have practiced aggressive tax planning. Not illegal, and it's certainly fraudulent or anything, but aggressive. And the number of audits have been small, and most of them have been no change. So we try to do our job for the client. Yes, sir.
Yeah, Gary, you said something about there's changes to the current RMD.
Yes, sir.
What are the changes?
Well, basically, because we're healthier and living longer, they've increased the divisor. Maybe it was 22. You have a balance as of the
So
end.
there's a different set of tables to use this year? Is that
Yeah.
what you-
And the tables are still, some of them, I've got part of them, but they have yet to release all of them. But it's meanings you can take a lesser amount of dollars as your required minimum
How can
distribution.
they not release it? I mean, we have to take our final payment before the 31st of the year.
Well, I haven't taken my final out of my simple because I'm older than 72, let me put it that way. So I'm going to touch base with Schwab, which is where my account is, to see if they'll recalculate. See if you're married and your wife's,
I understand.
all that stuff. But you might ask whoever's handling your account if they can recalculate 22. Give me a call, I'll try to give you an answer that's more specific.
Final question? That was an excellent talk on a very complicated subject, to the point of ridiculousness. It makes my head hurt. But the problem with that, if I could offer criticism, is we're losing track of the goal, where we want to go with taxes. What would the ideal tax situation be? And for that, it influences the economy very great. For that, I'd refer you to Taxes Have Consequences by Art Laffer. I don't know whether you've read that or not. It's an excellent review of tax policy and how the economy has gone up and down with the tax law. I would like to see actually a ceiling on the taxes as a constitutional amendment. I'd like your opinion on this. Because it actually bears on our rights.
Yeah, we're not supposed to have taxation without representation. Unfortunately, our representatives profit from the tax codes. I mean, the cryptocurrency campaign thing's just a tip of the iceberg. IRS themselves have come out and said that the super rich underpay their tax liabilities by 23%. They use offshore accounts, they use foreign income. I mean, I'm sure Brandon Biden didn't pay taxes on the $1 million shopping spree in Moscow, or however many dollars it was, or the other monies that he's received, maybe his wages, but nobody's even said that. So, yeah. Now, they audit the middle class because two things. One, you probably can't afford to hire a tax attorney, may not even want to hire a CPA to fight them. They may only want a few $100s, but if you take a few $100s times 1 million taxpayers, you're talking hundreds of millions. You take it times 10,000, any number. So the money's in our pockets, and that's where they get bulk of their taxes. 2013, when they passed the first income tax, the rates were 2, 3, and 4% on incomes in excess of 100,000 plus. I've got a poster at the office that is a tax form from 2013. Well, then, pardon?
1913?
Yes.
Or you said 2013?
Oh, I'm sorry. Ha, I wish. No, 2013 was not correct. 1913 was the first income tax. And that was challenged, and the powers that be decided it was legal, but that's been challenged. A few years ago, a lot of the Boeing employees decided it was illegal, so they claimed 10 exemptions or something, and didn't pay in much withholding, if any. They filed their tax returns, or they didn't file them. Well, eventually IRS caught up with most of them. The IRS computer does a lot of things automatically, and to get a human being to intervene is not easy. But yeah, if we had stayed with the original tax form, the levels today, I mean, none of us would have to worry about it. Of course, then there's Social Security. If you're self-employed, that's 15%. Most small businesses pay way more in self-employment tax than they do income tax. But
Our favorite CPA, Mr. Gary Hamilton.
thank you.